I'm Ed Ludlow in San Francisco. Caroline Hyde is off today. This is Bloomberg Technology. Coming up, Google's response to ChatGPT, what we know about the conversational AI search engine named Bard. Plus, Dell, the latest tech giant to announce layoffs, which have now topped 67,000 industry-wide already in 2023. And we dive into the China spy balloon story, which puts the spotlight on Beijing's global surveillance push. We'll get to all of that this hour, but first, let's get a quick check on your markets. Across equity markets, we're seeing some of the gains given back that we've had so far this year. The tech-heavy NASDAQ 100 down 0.9%, second day of declines. The other part of that story, of course, is yields pushing higher, up 11 basis points on the 10-year Treasury. This is kind of a wait-and-see moment for the market that's hit tech. Jerome Powell will speak with David Rubenstein on Tuesday at the Economic Club of Washington, and we're going to see if he walks back any of the commentary from last week. Meanwhile, look at Bitcoin, of course, trading 24/7, but it's trading and hovering around 23,000 US dollars per token. That's what's to come in terms of what's happening right now. Earnings season and tech continues. Pinterest really missing expectations. Fourth quarter sales softer than expected. You can see we're down 10% in after hours. That was kind of offset partially by a share buyback program and users coming in slightly above expectations, but the market not happy. And then gaming, Activision Blizzard up 0.7%. Strong end to 2022, all about Call of Duty performance. Remember, this is a company subject to a $69 billion acquisition by Microsoft. Look at the comparison we take to Interactive. We're down a percentage point. A lack of new titles, meaning that expectations were missed in the final 3 months of 2022. Another stock that really was in focus this Monday was Alphabet, parent of Google. Shares briefly pairing some of their gain, a spike after headlines that the company is releasing its rival to ChatGPT called Bard. That's to early testers. Bloomberg's Julia Love joins us now with those details. Julia, what do we actually know about Bard?
Yes, so Bard is, we've all heard a lot of buzz about ChatGPT, the chatbot that has taken the internet by storm. And Bard is Google's answer to that product. It's a conversational AI service that users will also be able to turn to for simple queries such as planning a birthday party or buying a gift for a friend.
Julia, as you know, I was on the phone last week with Ruth Porat, the CFO of Alphabet, and I asked her about AI, and she was a little bit defensive, saying, actually, we've been working on AI for years and years and years. My question, why are we only sort of hearing about a rollout of it into the real world now? Why has it been so slow to react?
Yeah, it's a fascinating question. Google has been a leader in this field. It created many of the tools that underpin this technology, but the company has held itself to a higher bar in terms of rolling out these products. The chatbots sometimes hallucinate. They sometimes deliver information that's incorrect, and Google has been very fearful about what might happen if that happened under the Google brand, and so that's why they've taken their time.
Yeah, I guess it's an issue of competitive threat, right? You look at what Microsoft's doing with ChatGPT and the underlying tech. There's already talk about how it's going to improve Bing, the search engine. How much of a threat does Google see the other players to its core business?
Well, Google still lives and dies by advertising. And so if users begin to turn to ChatGPT and other services for some of their everyday queries instead of a Google search, that could, over time, start to eat into Google's advertising business.
All right, Bloomberg's Julia Love, thank you. Terrific reporting this Monday. Now, as we mentioned earlier in the program, Dell has become the latest tech company to announce pretty significant job cuts. It will eliminate a little more than 6,600 jobs, about 5% of its global workforce. Bloomberg's Brody Ford was the first to report that news and joins me from the New York studio. Give us the details of these cuts.
Yeah, absolutely. So anybody who's watched this show or any other show in the world the last couple of months knows that almost every large tech company has made cuts, right? So Dell is the most recent one. It's cut about 6,500 people. That's about 5% of the global workforce, significant number. And the big story here, in addition to investors calling for greater profit, is that PC demand has really just fallen.
I was looking at the IDC data, right, from the last 3 months of 2022, and there's a pretty sharp drop in PC shipments. But I think I'm right in saying that third-party data was pretty ugly for Dell specifically.
And the first-party data is pretty ugly, too. I mean, they've been reporting for a while that PC shipments have gone down. In the pandemic, everybody needed a laptop. So everybody went out and bought. And then there was a semiconductor shortage. And so companies really bulked up their production of computers. And now they're sitting on all this inventory they can't sell. And demand is really sinking. I mean, in the letter, co-COO Jeff Clark of Dell had some pretty harsh words about the eroding market conditions, about uncertainty. And so this is more than just a macro story. This is also about computer demand really going down.
You mentioned that Dell's just one name among many. Who else has done layoffs? Where have we started this year in terms of the industry cutting back in what was, I guess, probably some bloat from the pandemic era, right?
Yeah, so obviously we had the huge ones, right? We had Amazon and Salesforce kick off the year. But we're observing an interesting trend that last week, a lot of these larger employers aren't as much household names. I'm talking about Workday, Splunk, Okta. We see them making cuts too. We see almost every large cap tech company taking this moment to cut some people off. I mean, Workday even said, hey, we don't need to do this. We're still growing headcount, but we're kind of going to take this moment to realign our priorities. And so, I'm really watching. I think a lot of companies that maybe haven't announced yet are going to, even if the scale is not what we're seeing from, Google, Meta, companies like that.
Right, Bloomberg's Brody Ford, good job. Thank you very much for your reporting. I want to get to a story in the debt markets. Chip maker Micron is selling $1.25 billion in high-grade US bonds. The notes will be sold in two parts, split across an existing tranche of notes due 2029 and new bonds that mature in 10 years. That, according to a Bloomberg source. The longer portion of the deal expected to yield around 225 basis points above treasuries, according to that source. The sales were increased by 50 million and relaunched Monday, which is a pretty strong indicator of demand. Now, coming up, the escalating intelligence battle between the US and China. We go from geostationary satellites to good old-fashioned spycraft, like balloons. More on that next. This is Bloomberg.
Clear that China doesn't want to act with restraint, and the Biden administration doesn't have much incentive to try to seek China's assurances that they will, because there's no trust on the two sides. So it could be used as a teachable moment, but I think the Biden administration really just wants to prevent the relationship from deteriorating into outright confrontation or even conflict.
That was National University of Singapore research fellow Drew Thompson there, giving his thoughts on the alleged or known Chinese surveillance balloon that had been flying over the mainland US. This, of course, now amid tensions that are rising between the US and China. Let's bring in Bloomberg's Ian Marlowe for DC on the latest. Ian, the balloon is no longer with us, but the decision was taken over the weekend to take it down. Why, when, and how did that happen?
Yeah, U.S. officials have been tracking this balloon for the greater part of a week. And, Biden has said publicly he wanted to shoot it down as soon as he heard about it. His officials, his top generals said, look, the payload hanging from that balloon is bigger than two buses. It's thousands of pounds. If you shoot that down over land, you're going to have this massive debris field that stretches for miles. And NASA had actually done an analysis based on the size of the object, how big the debris field would be on the ground. So even as this diplomatic tussle was sort of going on, because this balloon was kind of spotted on the eve of the Secretary of State's visit to China, they decided to wait until it was about 6 miles off the coast of South Carolina before they finally shot it down with an F-22.
And we update our audience, of course, that Secretary Blinken put that trip on pause, after deliberations about the balloon. I guess the question is what are we going to learn from the payload? I think I'm right in saying the US has sent divers to recover whatever the balloon was carrying. What are they expecting to learn?
Yeah, so they're I think, really hoping to get a look, an up-close look at the sort of sensors, the intelligence gathering equipment that is on this balloon. There's obviously been a lot of sort of debate out there about, you know, why are they using a balloon when they have low orbit satellites that are capable of taking, you know, high definition imagery and all these other kind of things. There's a general sense that the balloons are able to sort of linger over sensitive military sites, potentially take higher definition shots or video from different angles, sort of as they float and roam, you know, over these things. Right. Obviously, at a much lower, you know, threshold than in space. So I think there's a lot of stuff. They've already been tracking the balloon for days, so they've been looking to see how it kind of communicates back with wherever it's, you know, the details are thin, but they've already gleaned a bunch of intelligence just from watching it over the last few days, and now they're actually going to get their hands on, you know, equipment used to spy on them by their main geopolitical competitors. So I think this is, right. You know, we'll see how much they get, but at the moment it's looking. I mean, people are hopeful.
Ian, you have a piece with Jen Jacobs on the Bloomberg, which looks at what China and Chinese officials knew about this balloon. My question is, what has the response from China been officially to the balloon's origin and how it ended up over US airspace?
Yeah, I mean, I think this is one of the most interesting parts of the story, and I think it's just coming out now, just how confused and chaotic it was on the Chinese side, because the Chinese wanted this visit from Secretary Antony Blinken. They wanted images of Xi shaking hands with him, everyone looking very statesmanlike, the U.S.-China relationship on an even keel, everything going well. And then all of a sudden this balloon popped out. So it looks like there's sort of, you know, interagency communication errors here on the Chinese side. It looks like Chinese diplomats here in the US were surprised when the communication first started. The Chinese side expressed regret, yes. You know, which is actually quite rare, I think, especially when it comes to US-China kerfuffles. But then as soon as the U.S. shot it down, I think, you know, both the Biden administration and Xi Jinping in China both have their own domestic constituencies. You know, they need to look like they're taking a firm stand. And so as soon as the U.S. shot it down, the Chinese sort of changed the tune a little bit, said that they, you know, reserved the right to respond, and that was yes. A total overreaction on the U.S. side. So it's going to be interesting because both sides were trying to set, you know, bilateral ties back into a more normalized state, and then this balloon floated into the middle of everything and kind of messed everything up. So it's kind of gone against the narrative that both sides have been talking about for ages. So it's kind of really embarrassing.
It's inflated the news cycle, that's for sure. Bloomberg's Ian Marlowe, great reporting. Thank you very much. I actually want to stick with this conversation, particularly on what it means now for the US-China relationship, with Strategy Risks founder and CEO Isaac Stonefish. Isaac, you spend your whole life looking at China, the relationship between China and the United States, doing business in China. If you're a US technology executive waking up on Monday morning, how do you feel about the China opportunity given the weekend's events?
You feel like you just want to go right back to bed. This must be very frustrating for folks who have, for months, years, waited for positive economic numbers coming out of China, waited for the opportunity to deploy large swaths of capital, and then see the news, see the tensions, and understand that both from a Beijing and a DC regulatory perspective, this is a bad time to play.
You know, the context of the week, as we just discussed, is Secretary Blinken and what would have been an opportunity for, I don't want to say détente, but at least an in-person meeting of significance. That was then put on hold. What's more significant to you, the idea that the balloon was shot down or that meeting is for the time being not taking place?
I would guess that the U.S. side didn't want to have the meeting because they weren't getting what they wanted from the Chinese side, which is one of the reasons that this came out. I would say the most significant piece of this entire story is the spotlight it shines on Chinese espionage in the United States as well as globally, and how, okay, we're focusing on this giant balloon, but it's raising a lot of questions about Chinese brands like TikTok, like Lenovo, like Motorola handsets, and their potentials for espionage gathering.
Let's talk about TikTok then. On Monday, President Biden was asked by the press pool about TikTok and whether the US will ban TikTok outright. President Biden said that he wasn't sure yet. They hadn't made a decision. He also added that he, of course, does not have TikTok on his own personal or federally issued cell phone. Where do we sit in this process? Do you think that President Biden is basically not giving his cards away in how the US government will handle TikTok in this country?
There's a legal process and there's a political process. Politically, both sides have a very short window to ban TikTok before they alienate tens of millions of young American voters. We're not at 2024 election right now, but we're real close. And so I think both sides are trying to balance their worries about the national security implications of TikTok and the worries between losing a lot of people who could vote Republican or Democrat.
You mentioned a moment ago Lenovo, one of the biggest makers of personal computers in the world. You also have concerns about Lenovo, yet it's a commonplace product throughout North America and globally. Why is that?
Lenovo has very clear ties to the Chinese Communist Party. It's, I believe, roughly 20% owned by the Chinese Communist Party, and yet through careful branding, focuses on Huawei and TikTok, Lenovo has really just escaped notice. And so from a business perspective, you got to hand it to them on how their PR and marketing has been. From a national security perspective, one wonders why they're not getting a lot more scrutiny and why organizations running sensitive information aren't a lot more careful about the laptops they use.
I'd point out that, Lenovo is listed in Hong Kong and shares are, publicly available to investors through the public markets. But we thank you, Strategy Risks founder and CEO Isaac Stone-Fish. Now, coming up, why Apple is selling its latest iPhones at discounts of more than $100 in China. That's all next. And as we head to break, I want to take a quick look at Pinterest and some of the after-hours reaction in shares, down now 5%, pairing some of the decline after fourth quarter sales missed expectations. You can see some contagion or read-through to Snap, whose shares are also lower by 1% in after hours. We continue to track those as the calls get underway. This is Bloomberg. Deals and discounts over in China. More than $100 price cuts on Apple's latest iPhones. But why? Let's ask Bloomberg Intelligence's Anurag Rana. Anurag, you cover this stock so closely. I think the point made in the reporting is they're offering a discount so soon after launching the latest generation of handset. What's your read on it?
No, I think, they do offer this in China every once in a while. I think they really want to get jumpstart the Chinese market, which has so far been plagued by a number of things over the last few months with, COVID restrictions and then, opening some of that up. And China is an important part for Apple. 20% of its revenues comes from China. So I think if they're trying to jumpstart some demand in that area, last week on earnings, they said that they were looking at improved foot traffic back in December. So, maybe it's just trying to keep the momentum up at this point.
Well, I want to jump on that. So Tim Cook on the call said two things. One, they would have seen growth in the first quarter for handsets had it not been for supply chain constraints. And two, as you point out, that they did see improved demand once China's reopening really got underway. Do you take Tim Cook at face value on that?
Oh, I think so. I mean, see, you have to remember, last year, the smartphone shipments really were bad in China. But Apple didn't do as bad as the rest of the vendors. Remember, Apple is a very high-priced product. I think it is a lot less susceptible to big consumer shifts. But nevertheless, it is susceptible. Now, as far as China is concerned, we think whenever the reopening happens in a big, broader way, the Chinese consumer will go out and buy Apple products at that time. So we think if it's not in the first half, we think second half is going to be very strong for Apple.
Your company outlook on the Bloomberg terminal talks about the broader Apple ecosystem as being a good platform for growth. What is your outlook for 23 and beyond, and what drives it?
Yeah, so as far as the product growth is concerned, we are coming to a point when Apple is not going to grow in double digits in our view. It has grown 12% revenue in the last 5 years. We think the view, in our view, is over the next 3 years, think about a 6 to 8% revenue growth rate, coupled with that a little bit of margin expansion and then buybacks. I think that's the Apple financial model for the next 3 years. And I'm not so sure how many, investors out there are ready to, admit that's going to be the case for Apple.
In our last segment, Anurag, we were talking about the US-China relationship and geopolitics. You also note geopolitical issues as a headwind potentially to Apple going forward. What is your concern there?
I think the biggest concern is that almost, most of their products are assembled in China. And we have seen some diversification over the last couple of years. But I think it's going to take at least a decade for us to see any meaningful diversification. Now, luckily for Apple, they have done well to, skirt this issue all the way back from the tariff wars a few years ago with China to the most recent, big issues about semiconductors.
Right.
But having said that, I think they are not immune to any of these events, frankly.
Hey, Anurag, really quick. Are you excited about Apple's AR/VR headset?
So I think that, from our side, I want to see an application that can be used on the phone. The headset itself is going to be very good in terms of publicity and how it can showcase the cool stuff Apple can do. But financially, it's not going to have that big of an impact because these things don't move the needle given how dependent Apple is on the iPhone.
Right.
I do want to see what kind of apps, come for the iPhone for more of the augmented reality stuff, because that's where the ecosystem is very large.
Bloomberg Intelligence's Anurag Rana, always good to catch up. Thank you very much. Now, coming up, as Google readies its own ChatGPT competitor, what does the future of generative AI look like, and how fast is too fast? We'll discuss all of that with AI ethics expert David Leslie. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco. Now, there was a corner of the market where there was some green on the screen this Monday, and that's probably putting it mildly. AI-related stocks continue to see momentum. Big Bear has taken a lot of the headlines, up another 18% this Monday, rising for a fourth consecutive day. BuzzFeed and C3 AI. BuzzFeed more sort of tangentially linked, but it's continuing to catch a bid. C3 AI, another AI player that's up in a just crazy way year to date. In fact, let's change up the board and show some of the year-to-date performance of these stocks because, well, it's just astonishing. Big Bear up more than 800% so far in 2023. C3 AI a more modest 100% plus. But investors are trying to find and weed out the most promising names that could be a potential rival to OpenAI and ChatGPT. Public markets really starting to put some money into this area, whether speculatively or not. Google is getting its own ChatGPT competitor ready as well. A new conversational AI service called Bard. It will be opening up to trusted testers and readying the service for the public in the coming weeks. And ever since its own meteoric rise, ChatGPT's competition, well, you can tell, it's coming in fast, with companies big and small getting in on the race. I want to bring in Bloomberg's Dina Bass, who's written about this Monday, those competitors, big and small. It's quite the list you put together, Dina.
Yeah, we wanted to take a look at who was competing with OpenAI, not just with ChatGPT, but with OpenAI's larger language model systems. And the thing about OpenAI, because we're talking a lot about generative AI lately, but a lot of the startups in this space are making applications that are built on other people's foundational models. OpenAI and some of the competitors we talked about today make these, things called foundational models. They're broad, general purpose models that can be used in a lot of different ways rather than focusing on discrete, specific, narrower uses. And OpenAI itself has made some products, you mentioned ChatGPT, that work off of these general models. DALL-E also works off of its general language model. But there are other companies in this space as well. I heard you talking about Google. Google was one of the pioneers of this space. There's a number of startups, and they're attracting more and more attention in terms of funding from venture capitalists as well as other tech companies, also including Google. And so we looked at some of them. They include Anthropic, Cohere, AI21, Stability AI. And if these names sound familiar to your listeners, it's because a number of them have been linked with large funding rounds in the last couple of weeks.
You broke the story what seems like months ago now, but it was weeks on this $10 billion investment from Microsoft into OpenAI. And then, the companies confirm a multi-billion-dollar investment. But what followed was what seemed like a series of quick steps for Microsoft to kind of ingest the underlying technology into its own offerings. What are some of the highlights of what Microsoft's actually done with its investment into OpenAI so far?
So they already have a programming tool called Copilot, which uses an OpenAI, again, another subset of GPT, which is meant for programmers. Last week, they announced a product that's meant to write emails for salespeople using the language generation capabilities of OpenAI. And they also announced that the top tier of their Teams chat product, which is the one that competes with Slack, that's also going to start using OpenAI technology in order to provide meeting notes after the meeting. Now, you mentioned before Google is getting into the ChatGPT space with its Bard. There is also a Microsoft event tomorrow that was announced today. Microsoft will not say what it's about, but the belief, people feel that it is likely to be, potentially an announcement of their own use of ChatGPT in Bing search. So we're waiting to see if that's what turns up tomorrow.
Well, beyond the specifics, I saw Sam Altman tweet a selfie with Microsoft's chief. So I'm guessing that you're on the right track. I guess we'll find out in 24 hours' time. Bloomberg's Dina Bass, terrific reporting. Thank you very much. Now, what impact would generative AI have on your jobs? While AI is expected to eventually replace some jobs in financial services, media, legal, technology sectors, respondents of Bloomberg's latest MLive Pulse survey say not so soon. More than 2/3 of almost 300 respondents, mainly in the financial sector themselves, didn't view their own jobs as being at risk anytime soon. Results were also pretty split on whether respondents were even interested in investing in this new tech at work. Most investors appear not to use any kind of AI and are not even considering using AI to help them invest. 12% said they used one, and just 27% of respondents said that they were planning to. So let's keep the conversation going and bring in David Leslie, because I want to talk about the ethical side of the AI conversation, its role in moving technology forward. David Leslie is the Director of Ethics and Responsible Innovation Research at the Alan Turing Institute, a kind of mainstay of the UK's work around artificial intelligence. Let's start off with the year so far. Are you waking up every morning energized about what's happening in AI, or are you yourself losing sleep because of the potential concerns?
I think that when we consider what's happened with ChatGPT over the last few months, we really do need to take pause about the hastiness, the speed before safety that's really kind of driven the release of ChatGPT into the world. We know that researchers have easily gotten around the preventative content filters of ChatGPT to produce cyber security threats, such as new strands of polymorphic malware. They've been able to create fraudulent phishing campaigns and info stealers. We've also seen the potential for ChatGPT and other large language models to, in a sense, create fire hoses, disinformation and propaganda. That can flood the digital public square with lies and alternative facts. And so I would say there's a lot of exciting things going on, but there's a lot of reason for us to be concerned.
We're showing on the screen just how rapid the rollout is from research to development to new product launch across a number of names and platforms in the world of AI. You know, it's been astonishing tracking the headlines of how quickly new products and new names are born. Is that pace dangerous, or is that just the reality of innovation?
I would hesitate to say it's the reality of innovation. I would say that we really do need to avoid what's been going on, which is this kind of shock and awe irresponsibility of bringing things to the market with increasing speed. We've seen the move fast and break things attitude before, but this attitude is becoming perhaps more of a concern as the scale of the potential consequences become wider and deeper into society. And I think that we really need to we need to press the pause button a bit when it comes to the acceleration of the technologies.
So I guess the debate moves to who should police this. You know, when you reflect on the Alan Turing Institute's work around this area, your work in ethics, what's interesting is how many papers have been published by the likes of OpenAI, guidelines that the industry themselves have put forward. Should they be the ones to do that, or is there a need for very quickly a conversation around third-party oversight?
We absolutely need third-party oversight when it comes to these systems, especially these highly impactful systems that will affect large populations. Now, that's not to say that the practices of the innovators in designing, developing, and deploying these systems shouldn't involve strong ex-ante practices of impact assessment, of transparency, of end-to-end accountability, of bias mitigation. But these things simply must be subject to the oversight of third-party bodies, regulators, and perhaps certification schemes.
David, what is the single biggest ethical consideration around the use of AI in the real world today?
I mean, if we're thinking about these large language models and foundation models, we have to recognize that what these systems are doing is merely drawing on billions of parameters that come from human behavior that can have discrimination embedded in it, that can be racist and sexist, and can in fact ultimately be replicated and amplified in the systems. And so we really need to be aware that if we do not approach these systems with a sufficient bias mitigation mechanisms, we will simply replicate deeper patterns of injustice in the world.
All right, our thanks to David Leslie, Director of Ethics and Responsible Innovation Research at the Alan Turing Institute. I want to bring you some breaking news crossing the Bloomberg terminal. Credit Suisse is delaying bonus conversations for some bankers. Credit Suisse delaying what was a much anticipated compensation day for some of its bankers, that according to Bloomberg sources. That's while it restructures some of its Wall Street operations. Bringing more on that story as we get it. And coming up, MicroStrategy weighs deepening its Bitcoin bet with a futures play. Bloomberg's exclusive interview with Executive Chairman Michael Saylor. That's all next. This is Bloomberg. Binance, the world's largest cryptocurrency exchange, said it's temporarily suspending deposits and withdrawals of US dollars using bank accounts. The suspension will start Wednesday, according to a Binance spokesperson. No reason was given for the suspension, and bank transfers using other fiat currencies such as euros will not be impacted. The spokesperson says Binance will work to restart the service for US dollars soon. Sticking with crypto, MicroStrategy chairman and co-founder Michael Saylor says Bitcoin will outperform other asset classes and says his company is a levered Bitcoin play for crypto enthusiasts. Earlier, Bloomberg's Katie Greifeld and Romain Bostick spoke with Saylor about his business.
Well, our strategy is to acquire and hold Bitcoin, and we do it through cash flows and through equity and debt issuance. And that's amounted to about a $4 billion investment on our part over the past 2.5 years. So my role as the executive chairman is to oversee our capital markets activity, our Bitcoin strategy, and a lot of education, investor relations, some evangelism. The CEO, Phong Lee, was my number 2 for many, many years, and he runs the enterprise software business, which sells enterprise software to thousands of large corporations in 27 countries.
So let's talk about actually accumulating more Bitcoin from here, because if we look at the end of 22, MicroStrategy had about $44 million in cash. So when it comes to actually getting your hands on more Bitcoin, is that probably going to tilt towards debt and equity issuance?
You know, we've tried different things. We've issued senior debt, junk bonds, when we thought that was accretive. We've done convertible bonds, 2 of them when that was accretive. We've issued equity. We currently have a $500 million at-the-market shelf registration that's open, and we sold about $44 million worth of equity. And so sometimes we do that, and we've also borrowed against the Bitcoin. We have more than 100,000 Bitcoin that are unpledged that we can borrow against, and we use some of that to borrow $200 million from Silvergate and a Bitcoin-backed loan.
Michael, obviously a lot of attention on your company because of this foray into crypto. A lot of folks have embraced it, but there are a lot of folks who are also wondering, why buy MicroStrategy in place of just buying Bitcoin or other crypto in and of itself? What's the advantage of going through you?
Well, a lot of institutional investors aren't able to own Bitcoin as property, and they don't have broker-dealer relationships that will allow them to buy the underlying digital commodity. So for them, they could buy MicroStrategy in a couple of minutes in a phone call, and they could do it through their prime broker, and our stock is marginable. So some people are using us as a gateway because it's just a simple way for them to get exposure. Others are interested in the capital structure because the company is a levered Bitcoin play, because we've got about $2.4 billion of debt at a blended interest rate of just a couple of %. So it's a cheap, effective way to get levered Bitcoin exposure. Some people just want to trade the volatility. And so if you want to go long Bitcoin, we're a choice. If you want to go short Bitcoin, you're a choice. If you want to trade or arbitrage all the derivatives, we're a simple choice. And I have gone through the steps of KYCing with the Bitcoin exchange. It could take you 3 months to actually get the account to trade and buy the underlying asset. So, and some people don't have a mandate to even own the commodity. So we really meet a need for institutional investors that want to trade securities with exposure to the crypto market.
Have you given any consideration or had any meaningful discussions about whether it would be more appropriate to effectively spin off this crypto side of the business from the software side of the business?
Well, it's really, we're the only operating company that has actually got a Bitcoin strategy. So the fact that we have an operating concern, a going concern that generates cash flows and stable revenue that is not correlated to the crypto space is a benefit. We're able to use our stable enterprise software business as a basis to borrow billions of dollars that we're then able to invest in Bitcoin. So combining an enterprise software company with stable cash flows with a Bitcoin strategy is fairly unique. The software business has benefited because our employees have stock options, and so they've benefited financially. Our turnover has never been lower. So morale is really good, and awareness of the software business has never been higher. But of course, as a Bitcoin acquisition vehicle, we have a lot of flexibility that you wouldn't have as an ETF because that's an SEC 40 company and we're an operating business. We can take on leverage, we could trade volatility, we can sweep cash flows, we can issue junk bonds, et cetera.
Right.
So we would not want to separate the two strategies. It would be dilutive to either.
So I want to get to the software business itself, but I want to talk a little bit more about the Bitcoin holdings because something interesting happened at the end of December. You actually sold Bitcoin for the first time. It was a very small amount, and I believe that you bought back that amount and then some just a couple of days later. So I have a two-parter here. First of all, why did you sell in December, and do you have any more sales plans?
Well, we were, you know, with Bitcoin, because it's property, you could sell it and then you could buy it back the next day, and you're not subject to wash trading rules that would be applied to securities. So it's a more favorable tax treatment as of now. We had some taxable gains, and we were able to generate about a $34 million tax loss, which we intend to carry back against known capital gains. And so that would be a tax benefit to the company to the extent we can apply that. If you have billions of dollars of an asset on your balance sheet, you're thinking, what are the tax benefits if you were able to harvest those tax losses? Would they be good for the shareholders? And theoretically, we have $1 billion or more of tax losses we might harvest in the future.
That was MicroStrategy Executive Chairman Michael Saylor. Now, coming up, we polled our Twitter followers about how they watched the 2023 Grammys. We'll share the results and the latest viewership numbers from music's biggest night. Harry Styles there. This is Bloomberg. Time for going viral. The Grammys have been trending worldwide on social media, proving that the award shows are still relevant, but that's not necessarily the case during the event. We polled our Twitter followers on how they watched the Grammys last night, and well, over 90% of respondents said they didn't watch. Here with the actual data, Bloomberg's Lucas Shaw, who leads our coverage of the entertainment industry. I mean, Lucas, it's interesting. We were expecting potentially a rebound for the Grammys from the pandemic era. Did we get one?
We got a slight rebound. So the preliminary figures are about 12 million people watched the Grammys. That's up from more in between 9 and 10 million last year, and up from a low a couple years ago of about 9 million. But well below where they were before. You know, prior to the pandemic, I think the 2020 edition had about 18 million viewers. As recently as 5 or 6 years ago, you had about 25 million people watching. So the audience for the Grammys is, you know, half what it was many years ago.
You saw the results of our poll. That's one audience, right? 90% of respondents saying they didn't watch at all, but the other options were cable or streaming. I guess then the conversation goes to how are networks and platforms kind of adapting to seize on how people are actually consuming events like the Grammys?
Well, a couple ways. One is that these award shows now tend to be available both on live TV and on streaming. So it was on CBS, but it's also on Paramount Plus. So if you're someone who does not pay for cable or satellite, you can get it that way. Of course, Paramount Plus not as big as Netflix or Disney Plus, but it has tens of millions of subscribers. And the other thing is obviously clips and moments from these events spread across social media. So that's Twitter, YouTube, TikTok, and the like. You probably had, our own Ashley Carmen, who was in the press room, asked, God, I'm blanking on his name. It's embarrassing, but he asked producer Jack Antonoff a question about Live Nation, and that got shared all across social media this afternoon.
Ashley Carmen also writing about Beyonce breaking the record for Grammys wins, but she didn't win a top award.
Yeah, look, this has been a trend with the Grammys, particularly with Black artists that kind of fall under hip hop and R&B, is they win a ton of awards in the genre-specific categories. In Beyonce's case, she won both in R&B and electronic and dance, but they don't win the big three, which are Album of the Year, Record of the Year, and Song of the Year. So remember, with Beyonce, she now has won more Grammys than any artist in the history of the event. Yet she has only won one of those big three awards, Song of the Year, and she won it once. Right. You compare that to an Adele, who's won Album of the Year twice.
All right, Bloomberg's Lucas Shaw. A busy Sunday night for you and the team. Thank you. Well, that does it for this edition of Bloomberg Technology Tuesday. We had Microsoft's Corporate Vice President and Consumer Chief Marketing Officer joining us on the program. Don't forget, check out our podcast. So much to recap from the show. This is Bloomberg.